Okay, so we are talking about inventory. We looked into many varieties of back-to-back prominent point of control. We also looked into how a multiple war lows got formed. One of the case study which I discussed recently is the formation of the multiple prominent point of control. So I'm going to show you those things. I already shown it, but this I'm showing it again because it's very relevant to what we are talking right now. We are talking about inventory, and which is very much relevant to the recent setup. It's one of the signature traits. This happened during December 2018. That means last month. We had this one prominent point of control, two prominent point of control, three prominent point of control, and four prominent point of control, and one more ORR setup. If it's an open rejection reverse, it's a weak open rejection reverse. If you understand, weak open rejection reverse is it's like price opens above, it rejected the previous day low, rejected previous day high. But that particular day, point of control haven't migrated much. If that day point of control would have been migrated now, that will be considered as a stronger, stronger rejection. At times, those rejection will be conforming with volume. The first 1 hour volume will be more than last 30 days of volume. So you can track all those open rejection reverse over here. So you can let's say if you want to know what is the recent rejection which is happening over here, you can go to trade action. TradeAction.in, it's absolutely a free portal for only for TradeGenie customers as of now. And so you can use your TradeGenie credentials to access all your that ORR setups. So one of them, what we have is an ORR scanner here. It says whether the scanner, whether that rejection is a strong rejection or a weaker rejection. So enter your credentials and then
so this portal is free, right?
Yeah, it's free for TradeGenie customers. So here, one of the scanners which we developed, it's called price rejection scanner, which is nothing but an open rejection reverse scanners. So you can see recently there are a couple of rejection came in. One is BEML, Canfin Home, and HM Motors and NCC. So these are the places, these are the stocks which are showing currently weaker rejection. Now, once you had this BEML, then you can go and check the profile. Like, let's say BEML had a weaker rejection. Then what you can do here is can go and check. Let's say BML, I want to check it out. So I'll pull up BML here, NFO, BML. Then I'll just go and verify whether it's a weak rejection or not. Continue. Sooner or later, many interesting scanners, you can find it out. Let's say like BML. BML. So 985. That is the rejection. BML is, there is no rejection there. I'm not sure what kind of rejection happened over there. What else is there? Canfin Home. Let me check out Canfin Home. Canfin Home had a rejection. Canfin Home had a rejection. It's a 2-day low breakout also, and it got back into the range. It finally came up like a B-shaped profile. It formed like a B-shaped profile. So you see that it forms an ORR top over here, and that is a weaker rejection. It's a weaker rejection because it broken 2-day low, and it got back into this range. So it is considered as a weaker rejection, but the point of control haven't migrated at all. There is a price rejected completely. That particular day, point of control started forming here. It never went down. So it will be considered as a weaker rejection. Moreover, volume also not confirming. So there is one more scanner over here where it tells you how the first 1 hour volume looks like. So there is a volume shocker scanner which tracks only the first 1 hour activity. So let's look into the high volume activity. Recently, there are no high volume activity. Yeah, TCS. TCS high volume activity happened because yesterday was an earnings season. First 1 hour heavy volume happened. Otherwise, you see that most of the first 1 hour turnover was around 171 crore, 204 crore, 134 crore, 129 crore. So the bigger turnover happens if there are no any news-based impact is there at the market open, or if some smart money is moving their money. So there you'll find such trading activity there, where we call it as at times if the strong volume is also happening in the first 1 hour, right? So this strong volume usually happens. It marks in yellow band. You see that it is marked in the yellow band, and it measures 914 to 1014 volume activity. Right? If the turnover is more than last 30 days of first 1 hour turnover, it measures all the first 1 hour turnover, and one of the day if it is more than last 30 days of average turnover, then in that case it gets highlighted. It usually this scanner gets updated around 10:25 or so. By 10:25 you'll be able to get a picture about the turnover of Nifty, of Bank Nifty, or for any other stocks. So you can go back and check any other stocks. Let's look into Nifty volume. I have to look back possibly. Volume shockers, and then I'll pull up Nifty. So this is Nifty. Each and every day, the first 1 hour volume got recorded over here. You can see usually the volume will be around the first 1 hour itself. You'll be able to know what quantum the buying or selling is happening over here. So usually these are very low turnover records. On December 11, we got election results, right? So let's go and see how the election results turnover was. December 11. So December 11, you can see it's compared to the usual one, it is 5,438 crore turnover. Usual turnovers are around 16,000, 20,000, 24,000. That's the usual turnover you usually get, or 13,000. On a dull, boring day, you'll be getting 13,000, 12,000, something like that. Where the first 1 hour, there won't be any greater strength in the markets. But on even days, something like this, or election results, the turnover increases. That means participation increases on a broader scale. This is 1 day before event. So again, a lot of speculative activity would have been happened over there. 1 day after the event, also a lot many activity happened over there. So more activity was happening around the election results days. And if there is any bigger event is happening, again, the volume increases. But if you look into the recent volume was like first 1 hour, 1,400 crore, 1,800 crore turnover, 2,200 crore turnover. These are very low turnovers compared to the benchmark. Right. So if the turnover is also high, and if you are seeing an open rejection reverse, then it's one of the early indication that day is going to be a open rejection reverse day. So maybe I can show you one of the example where it shown such kind of high confidence, kind of a high open rejection reverse with volume. Whenever open rejection reverse is happening, it's good to know what is the first 1 hour volume and whether it is compared to the last 30 trading days of volume. Is it trading an average volume or more than 30 days of average volume is getting traded? So sometime back in Sun Pharma, it formed an open rejection reverse. Open rejection reverse. No. Okay. I'll just go. I have kept it.
Oh, you are given 3L.
Okay, I'm sorry. Whatever I search, nothing is happening over here. I don't know why it's not coming up. Usually it used to come up. Okay, maybe the search settings might have some limitation. It may not search more than a year data points. But when Sun Pharma bottomed out, one of the day it bottomed out, maybe I can show you from the from this. I can show you Sun Pharma. I'll go to hourly time frame so that you can look into the volume also, how the open rejection reverse came. So here, the all-time low which happened over here. This low, if you look into this low, I'm going to bring a volume charts over here on the hourly time frame charts. Volume. Okay, so you look into the volume was pretty high. Only if you collected only the first 1 hour of volume, that first 1 hour of volume is closely 400 crores of turnover. It was, I still able to recollect, it's 400 crores of turnover. You see the picture, price opens gap down in Sun Pharma, completely rejected into that, completely they started developing higher. In fact, point of control migrated on that day. Point of control also migrated. It also came up with a bigger volume. That first 1 hour volume, such kind of volume, it never seen in the last 30 trading days. So, and open rejection reverse is happening. That is a sign of a that is a sign of a strong overlap, and point of control is also migrating for that day. So first 1 hour itself, we'll be able to say that that's a strong overall because volume was relatively big and price opens gap down, completely got back into the range. with a very high turnover volume. That is a clear sign that it's a strong ORR, and that could be a potential market bottom. That could be a established market bottom. That first 1 hour itself, you will be able to gauge that kind of information. Volumes are supporting at the open. Buyers are responding after a gap down. Mostly they are responsive buyers, and that is happening with a huge volume. Means some smart money is parking their money over there. That's what it means. Okay, again, so now if you want to classify which is strong ORR, which is weak ORR, so maybe to summarize strong ORR and weak ORR. A strong ORR is something strong ORR. Most of the strong ORR has 3 criteria. One is POC will migrate. POC migrates on the ORR day. Means, let's say there is an ORR is coming here. Price opens gap up. The price has to open gap up, right? And then it completely rejects that previous day high, got into it, and then initially it start developing point of control, and lately it migrates point of control. And this is a good point of the point of control has to migrate from here to here on the downside. This we call as a strong ORR in terms of prominent point of control. And the second thing is that kind of where this point of control is forming, that really matters. After a sustained uptrend, if it's coming at a 3-month high, 3-month high, or a 6-month high, a multi-month high, or a let's say 1-year high, if you are seeing that kind of ORR, it could be also one form of a potential market top, right? So if it can also come if it is coming at a major swing high. If you are seeing a migrated point, if you are seeing a ORR with a POC migration, then that could be a strong ORR. If it is coming at a major swing high, it can come in the form of a 3-month high, 3-month or 6-month. It can be at the high or low. Not necessarily it has to be high, or 1-year high or something like that. It should come at a major swing highs, major swing high or low. Then we can term that as a strong ORR. Or first 1 hour, it has to support. I mean, first 1 hour volume greater than last 30 days of average volume. If this is also supporting, we can also still say that, and this has to support. We have a ORR with a strong volume, but it is not coming at a major swing high or major swing low. It's coming somewhere else. At the same time, you are seeing point of control also migrating. Then it is termed as a strong open rejection reverse, which usually brings some good swings in the markets. Right.
So how to calculate this? How to see this? 30 days average volume. In the sense, how we can keep the record.
First 1 hour volume.
30 days average volume. We need to see it should be greater than last 30 days average volume, right? So
yeah,
somewhere we need to track this volume.
See, what you can do is that you can build a simple scanner in AMI Broker or something, or you can make use of tools like Trade Action or something like that. Anyways, it's free. You can use those tools.
Which tool it is?
Come again?
The last one you said, the tool name, it is free.
Trade Action. So you said, no, all the first 1 hour trading activity has been measured over here.
Okay, fine.
Right. So a weak ORR. What is the characteristic of a weak ORR? One is volumes are not supporting. And no POC migration, no POC migration. So these are the 2 key characteristics where you can say like it's a weak ORR. As simple as that. So maybe I'll share it in the Slack. You can keep it with you. Okay, so when you're seeing a weak ORR is nothing but stops placed at that side. Weak ORR is nothing but stops placed at that level. And in short term, you can anticipate a revisit. Short term, you can anticipate a revisit. Whereas for a strong ORR,
So for weak ORR, it will end up with normal day only, right? Normal day or neutral day.
yeah, kind of. It's an open rejection reverse, but it can end up like a normal day or it cannot be neutral day. IB will break only on one side, on the downside or on the upper side. So IB will be only broken on only one side.
Okay.
But if it's a strong ORR, it acts like a strong support if it is happening on the downside, or if it will act like a strong resistance if it is happening on the upper side. So these two key criteria you have to keep it in mind. So I'm gonna save this text file later for the later use. Strong ORR versus weak ORR. Okay, there is one more thing over here, a P-shaped profile coming at a all-time market top, which is not at all, let's say at times what happens, there will be a P-shaped profile coming in, and that will be an all-time high. A P-shaped profile which is coming at an all-time high, which is not a secure high at all. So what we can anticipate is that maybe a temporary downtrend. Next year onwards, P-shaped balance will be your reference. So price started accepting below the P-shaped profile. There'll be temporary sell-off you can see in the markets, but eventually they will come and clear. That sell-off can extend anywhere between 5% or even 10%. It can be a sell-off, but eventually that P-shaped profile will be revisited. So I had never seen a P-shaped profile coming at a major swing high. I never seen that. So what are the P-shaped profile? The one of the example is the Maruti P-shaped profile. And from there, the P-shape, the very next day onwards, after a P-shape profile coming at a major swing high, there was a price acceptance below the P-shape profile. Followed by that, some 10 to 12 days, there was irritation in sideways markets, and followed by that, they again rallied back into that reference. So this is around 11th of November again. I'll again go back and show you how the 11th of November played out. Maruti. This is one of the day we got a P-shaped profile. This day we got a P-shaped profile. And then we got an acceptance. Price was going down. But that P-shaped profile, this is also an all-time high. This is also all-time high during November. Price was sliding back. It went down some 3 to 4%, but eventually all got retraced back. Right? So a P-shaped profile which is coming at an all-time high, it is an unsecure high. So positionally, you can expect price to revisit back into the range again. So trading is not just about entry and exit. It's about managing your risk and expectation. Expectation is what you can expect in today's market. Rather than, as I said, some people are having weird thoughts like market will go to 8,000, market will go to 12,000. Those are unweird. Those are really weird expectations. So what is the real expectation you should anticipate on a day-to-day basis? That puts you rightly in the game. That is where you'll be able to play a naked option buying game or a naked option selling game with a reasonable expectations in the markets, rather than having weird expectations. That weird at times we might have that weird expectation. Market has to fall. Market has to fall. That kind of weird expectations. And despite that, market will be holding up with strength. You know that it is strength. Despite that, you will be still having that weird expectation. They are nothing mere, but they're just bias in the market. It's something like we have an AB poor low in ICICI Bank, but your mind says that AB poor low will come and clear and come and clear. So you'll be always trying to short the markets, but every time the market moves up, but when the market is really coming and clearing the AB poor low, you'll not be in the game. So if you manage what is the realistic thing you can anticipate from when given the market profile situation, what you can expect, is it a sign of a strength? Is it a sign of weakness? That is how you'll be able to manage your risk as well as expectation in the markets. That's why you'll be learning to wait. Otherwise, you'll be, if you're just thinking only about what is my entry point, what is my exit point, that's how it doesn't work in the markets, right? So over a period of time, if you haven't done trying to manage expectation, what actually I can anticipate from today's market, or what I can anticipate from the in next 1 or 2, 3 days, based upon what the market information got generated, based on the market generated information, what I can anticipate, why I should anticipate, how long I should wait, how long, when the high confidence is going to show up, how I have to react, when the low confidence is going to show up, how I should react, how I should prepare for those scenarios. That is what it keeps you in the game for a very, very, very longer period. That is where you'll be able to survive and make money slowly and consistently. Again, this is one of the classical example for a back-to-back secure high. This is also one form of a major market tops. One of the form where I think this day is an long-term capital gain announcement came on a budget day. So a back-to-back secure high is something like this. It forms. So we are talking about a back-to-back secure high, right? So back-to-back secure high. These two, look into these two highs. Okay, it's running really fast. So this is still today. It's an all-time high, which I kept on, which came on February 2018. What was happening on that day is that you're getting some sort of an setup like this, right? So it forms an P-shaped profile. Not much, but it forms with a multi-day breakout. Multi-day breakout and point of control surveyed over here. Next day onwards, we got a correction from there onward. Next day onwards, we got an acceptance below P-shaped profile. That is one sign that this market is weaker, but it's a P-shaped profile. It's a P-shaped profile. And one more day, but if you look into the high came really like this. It haven't came at A period. It haven't came at L period. It haven't came at M period also. It's not at A. It is not at L. It is not at M period. Somewhere during middle of the day. What I want to say is that middle of the day, that high has been made. So that is one reference. I marked that. And then two trading days. You see that 2 trading days. Nothing happened. It was completely a balancing structure. It was a completely balancing structure. And one of the other day, you see that this 2-day high has been broken. There was a failure. This is on a long-term capital gain day, right? So, and it becomes 2 major highs are there, 2 major swing high, which came during middle of the day, and that is how we'll say like it's a back-to-back secure high. These 2 highs will be a clear-cut sign of a major market top. Right? It forms a major. It can form. Let's say it's something like this. It usually forms a swing high. It usually forms a swing high, and followed by that one of the day you're getting like this. Some activity happens, and again one of the day you form 2 highs. 2 highs are the recent lower highs. This is higher high. This is HH. And this is lower high. This is lower high. This is lower high. Then we call that high as and moreover, it should be a major swing high. That should be a major high swing high. It can be 3-month high or a 6-month high. Sorry, it's bad write up. It can be a 3-month high or a 6-month high or a 1-year high or a all-time high or something like that, or all-time high. Where once that higher high is established, some activity happens, and one more lower high is established over there. So these two, higher high and lower high, it should not come at a period. That is, it should not come in the first half an hour. It should not happen in the last 1 hour also. So it should not happen in the last 1 hour also. Well, in that case, we call that as a back-to-back secure high. Right. I also posted in when I was talking about this, I also talked about this pattern in the old market profile analysis section in market calls. So that's an till today this is an all-time high. It came with an back-to-back secure high. And we also look into the back-to-back secure high or a back-to-back secure low. It can happen with some activity or without some activity. Also, it can happen. It's something like, let's say, there is a major swing high came, and one of the day we got this, and second day we got this. It is coming at a major swing high. It can be a potential market top, right? And from there, what you can expect is you can expect some nice rally coming into the markets on the downside. So I'm going to show you a couple of other examples how the back-to-back secure high happened. What are the other ways a market, we call that as a back-to-back secure high. So this is one of the example, a back-to-back secure low happened. It's a ulta scenario. It happened on Nifty April series, and one of the April series, Nifty went down, and it came back. Second day also went down and came back. So that is why we'll say like this is a back-to-back secure low. It acts like a potential market lows. Right? So till today, this is a back-to-back secure low. So so far it is still not breached even. So this is from Nifty April series. This happened during Nifty April series, right? And one more back-to-back secure low. It happened on this is on Karnataka election day. We got a rally and then a pullback, and then one more rally, again a pullback. So these are again back-to-back. We call that as a back-to-back secure high. So that high will act like an immediate resistance, strong resistance. Unless the price is not going to breach, you're going to see some downtrend. And here the downtrend lasted for almost another 400 points downside. So 400 points. Those are positional trade zones in that swing. That's an indication that this trend is about to top out. Again, I can show you one more example where the back-to-back secure high came very recently, last month. And then from there, we got some 300 points or so. Let me check from the profile if I'm able to figure out. Both in Nifty, Bank Nifty, we had that pattern. In fact, it's happened during December month. So on a December month, if you understand here, you see this pattern and this pattern. It's kind of a swing high, again a kind of a swing high. It's kind of a back-to-back secure high, and then the market dropped. We also talked about this. It's kind of a back-to-back secure high. It is not a back-to-back secure high, but we call that, it's one more pattern. It's called G2. G2, which is coming at a major swing high, is also a kind of a top pattern. It's not a back-to-back secure high, by the way, because we don't call that as a back-to-back secure high because it came at the day's top. It came at the day's top, but we call that as a G2 high. There is one more G2 pattern which I'm going to talk about it once this one is over. We'll be talking about G2 there. We'll talk about that set of market tops. So what is happening here is it's kind of a G2 top got formed. The G2 top is also one form of back-to-back secure high. So it's a G2 pattern. Probably it's on 20th, right? 20th December. We had this webinar where we talked about this setup. Twentieth. So we had a webinar on trap buyer sellers, stealth auction, and market profile, market commentaries. In the market commentary session, last 15 minutes, we talked about the formation of a back-to-back secure high, and we discussed about the potential market top coming over there. So last 15 minutes we discussed this. Last 10-15 minutes we discussed.
It's not breaking the. Again, give up. Again, let's say price started going above. Most of the potential top comes like this. We have a G2 high and then sudden elongation to the downside. Right? So otherwise, maybe something else is going to happen. Maybe we are wrong. What we're thinking is wrong. Maybe we have to change our perception. We have to trade in the direction of the markets rather than we anticipating something else. Let's try to trade in what the market is trying. So if maybe I could be right if the spike base is going to be taken out tomorrow at the opening itself, or maybe the price opens gap down again, we started going down. That is one of the way where we can think like this could be a potential 10,900. So watch out very clearly. Tomorrow, if you're seeing the market is breaking 10,900, the positional short sellers should be stepping in. I'm talking about positional short sellers. And if not, maybe.
So what is happening here is that we talked about it. It's a kind of a G2 high pattern, which I'm going to discuss in a shortly. We're going to discuss about it, which is coming at a major swing high. That swing high was almost it's kind of a 1 month high, right? But it's one good swing, and we are the swing high. We are seeing this back-to-back secure high. Followed by that, there is also clues that you see this auction. You would recollect what auction it is. What kind of auction it is? It is a stealth auction, right? It's a stealth auction. One of the sign that the inventory is getting long to too long. That is why we discussed that this could be a potential market top. Combining, there is a G2 high also. There is a stealth auction on the higher side also. Both are indicating that the inventory is getting long to too long. And once market had done this, the very next day, you can see how the inventory correction happened. The inventory correction happened in the form of you've seen this 1 and 2 and 3. A lot of the break was coming really strong, and it broke everything because the inventory correction was, there was serious liquidation coming into the markets, and then market went lower another in next 3 days. There was a correction of almost 300 points from there. So these kinds of things you'll be able to understand once you know what kind of inventory situation we are in. Right? When the inventory is dangerously long, too long, or what kind of a long liquidation you can anticipate from the markets. So those are the things you'll be able to assess what kind of odds the market could provide and how you can prepare for those. How you can prepare on for that kind of days. I'm going to replay the rest of the session.
You have to wait. Maybe let's say the price opens here. You have to wait. Sorry, for the high confidence to show in, high confidence sellers pick in. If they're not, again, give up. Again, let's say price started going above, sentiment is still positive. Maybe they might take G2 high with a short covering. That is a possibility. So your confidence will be 2-day high will be the confidence. If the 2-day high is going to break out. Again, that is also a sign that it is not a top. Maybe still the auction is continuing. And or let's say the price opens here, middle of the day. Neither good buying, neither good selling. Auction rotates, it becomes an inside bar. That is also a sign that it is not a top at all. Maybe the top is not made at all. That's what if it is a top, price has to start somewhere here or somewhere here, and they have to take it back. You know, this should happen. A price opens here, it should happen. Or a gap down, and it should happen. These are the signs that the market makes a potential market top with sentiment turning negative. That is a key thing. The sentiment turning negative and spike base in both the cases, in Nifty as well as in the Bank Nifty, the movement should be pretty similar, and then that confirms the potential. Right. So now let's have before leaving the session, let's have a quick final look into ES mini, and we'll stop the session over. Right. Let's check what was the activity around there.
Okay.
I'm going to disconnect.
Yeah. So that kind of confidence you'll be able to gain once you're able to gauge the that kind of potential back-to-back secure high. Again, we already talked about stealth liquidation multiple times, where one of the day, this is NASDAQ futures, where the inventory was, you can see one of the day high. There was a sell-off. Again, buyers are trying to shoot up. They're not getting anything. Again, the buyers are trying to shoot up. They're not getting anything. They're trying to shoot up. They're not getting anything. On that day, there are 1, 2, and 3, and total 4 lows got from 4 lower lows, which is an indication that the inventory is short to too short. There could be a short covering rally, but that short covering rally haven't happened easily. The next day they try to take it down. Nothing happened. Again, there was a lot of sideways action followed by strong recovery. In fact, they went on testing an all-time high also in NASDAQ once this activity happened from there. So that is the kind of an market scenario that what you can gauge from the stealth auction. From the stealth auction, most of the stealth auction are indicate this stealth auction is an indication that inventory is getting short to too short. Right. Again, from an intraday perspective, it is bearish. But from a positional perspective, it is bullish. That's what it means if it is happening on the downside. The one which we seen recently, the video which I shown over here, it was. I'll go back to the video and replay it again. Okay. Anyways, the other video which we seen recently now, where the stealth auction was. We have an G2 pattern. One of this pattern, we have this stealth covering, short covering rally. So it formed like this, higher high. And finally, it end up like this. It forms a G2. It also came up with a stealth short covering auction. And then what we seen is a correction, strong correction, which we'll be able to predict. These kinds of patterns happens very rare. The combination of G2 and a stealth auction, it happens really rare. That says that the markets are dangerously long now. What you can anticipate is a short covering, long liquidation in the markets. Right, that is one more example for inventory getting long to too long. Stealth auction is also one form of inventory getting long to too long. And sometime back in HDFC Bank, we got this kind of stealth auction. Not the stealth auction, but let me go back to the recent HDFC Bank daily charts. HDFC Bank. So if you look into this high and this high, right? So if you look, by that time, we already posted in the Slack community that these two highs, right? So this high and this high, which is coming at a major swing high, and both happened like this. One of the major high, there was a mid of the day activity like this, and some activity happened for a couple of days, and one of the day, it happened again like this. From the intraday perspective, I'm talking about it. That is why we'll say like both the highs here are back-to-back secure highs. Both the highs here, this high and this high are back-to-back secure high. It stayed, and similarly in HDFC Bank, similar back-to-back secure high happened over here. So one of this high, the other high here, it was like this. No, I'm sorry. So one of the high here and the other high here, it was like this. Back to back, there was a kind of a G2 formation, and it is also a back to back secure high. And from there, what we had is that we had a lot of mechanical levels, one more mechanical level, one more mechanical level. So I was having 3 mechanical levels and a prominent point of control and one more back-to-back secure high. All are showing that it's an indication that this trend could reverse. So one of the zones where I took future trade, and we closed that trade in 4 days with a solid correction in the markets. But these kinds of exponential setups will not happen very frequently in the markets. When it is happening, you should learn to recognize those potential odds where your risk reward ratio will be 1:10 or 1:20 or something like that. And it doesn't happen very frequently in the markets, right? So when it is happening, you should be able to recognize all those nuances and try to take a mean reversion bets to fade against all those weaker hands. Maybe this is discussed in February 2018 TradeZilla. Probably if you look into the February 2018 TradeZilla link, you'll be get to know how we seen this information and what kind of odds persisted, how it initiated those trades, and what we anticipated and how the market had done. Everything is covered in the daily market commentary over there. And okay, so there are 2 back-to-back secure highs from the profile perspective, both in HDFC Bank. I mean, both of them in HDFC Bank are back-to-back secure highs. So with this, what we can do is we can take a short break. I think we can we'll get back by 3:10 p.m. Probably another 1 hour of discussion, and then we are done for the day. We'll be discussing the G2, which is the most important observation, right? So it's one of our signature traits. The G2 pattern are one of the major signature traits of market calls. So don't miss this part, I would say that. And we have specific fans who play only G2 levels, G2, G3 levels. They play it in our community, and they're doing it quite successfully these days. Okay, so it's a new pattern which has been invented, and we are playing this for more than some 6 to 8 months. It's a new pattern which we are talking about. It's just 6 to 8 months old. And okay, we'll take a short break, and we'll get back by 3:10 p.m. Right? And if you have any questions, I'll take the questions once the break is over. Thank you. Okay, here comes one of my favorite concept in market profile. We'll call that as G2 and G3 patterns. These are very simple price action patterns. And it's kind of a cheating pattern, which also helps you to understand whether the market is getting long to too long or getting short to too short, which is a secure high, which is not a secure high. We are going to see a couple of patterns, and generally G2 represents last 2 days of trading activity. And if you are seeing a G2 low or a G2 high, primarily we'll be expecting within T plus 2 days to get cleared. That is a G2, which is nothing but the target level. It could be either a 2-day high or a 2-day low, or a 3-day high or a 3-day low. So for a G3, the target is generally either 3-day high or a 3-day low, and it will be expected within next T plus 2 trading days. And those are the results of an high probability short covering patterns. So usually the end result is what? The end result is where we'll be pre-anticipating a possible high probability short covering rally or a long liquidation patterns. And in a month, you'll be getting 1 or 2 G2 here and there in Nifty or Bank Nifty. And we'll be, along with this market profile pattern, we'll be using one more tool called Bell Trend Analyzer, or in other terms, we also call it as a Turbo RSI. We'll be using grade 2 and grade 3 patterns in tandem with the Bell Trend Analyzer. It's kind of an price oscillator. It's kind of a smooth oscillator. So G2, G3 will be watching out on a 30-minute scale, and The trend analyzer will be watching it on a daily scale. So it's kind of a combination of a multi time frame pattern where we'll be seeing negativity on the G2, G3 and the exact opposite reaction on a daily scale. So maybe I'll show you a couple of examples there how you can interpret this. First we'll try to understand what is G2, G3. So when we are talking about this is a grade 3 rally pattern. What is happening over here is that the condition is that there are only 3 conditions over there. The letter A high should be broken on all the 3 trading days. You can see that the letter A high has been broken on all the 3 trading days. Letter A high has been broken. Letter A high has been broken by some other candle. That is rule number 1. Rule number 1: all the last 3 trading days, the letter A should be broken, right? And none of the days should be an inside bar. So all the 3 days, none of them should be an inside bar, and in fact, it should make lower highs. So you see that the day first day high, if it is 100, assume that it is 100. The next day let it be 98. Means it should form lower highs. Next day high, that particular day high should be lower high, and another day high, it should be again a lower high, and it should be something like 96. So let's say this is 96. So all the 3 trading days, markets are continuously forming an lower high relative to the first day. At the same time, you can see that the previous day low got broken, previous day low got broken, and previous day low got broken. So value also developing lower, value also developing lower, value also developing lower, and value also developing lower. So if it is happening for 3 continuous trading days, we call that as a G3 high. That high is called as a G3 high. The anticipation is that that level will be tested. That will be usually get confirmed, or by end of this day, you'll be able to get a confirmation. This particular day, you'll be able to confirm that that is a G3 high. And if the next day, if your indicator is turning positive, so we are talking about one more indicator, right? The turbo RSI. If the indicator is turning positive at the open itself, go and get it. The possibilities of testing that as a target in next that higher usually comes in the form of short covering rallies. Usually those rallies comes in the form of a short covering rallies or a long liquidation, and at times, very rarely, once every 6 months, that comes in Bank Nifty on an expiry day, on a Bank Nifty or a Nifty, the G2 pattern or a G3 pattern, which is also coming on the expiry day, and still the sentiment was trading positive. That odds are, it happens, usually happens once every 6 months. So if that pattern is happening next time, you have to be really cautious of that. That is where your options becomes, the weekly options becomes 100x, 200x, 300x, 400x. And we, at one time we had seen the setups which had yielded almost 440 times. So this is one of the setup which came on May 2018, 31st. It's a monthly expiry also. On the monthly expiry, one day before monthly expiry, we have the G3 pattern. So next day is supposed to be expiry. If you look into the daily sentiment was positive here. It went negative. And the very next day, the market opened here. It turned positive. That is an indication that this market is going to show a short covering rally. And if you look into the confidence also, point of control was building above previous day high. And that is a clear sign that it's showing higher confidence in the markets. G3 is on. So the end result was a strong short covering rally. That day, Bank Nifty done closely 700 plus points. Market opened some 100 points higher, 150 points higher. From that, it done another 500 points, 500 or 550 points higher. That day was a late spike, and that one of the options which was trading at 1 rupee, it ended at 440 rupees or something during the May month, right? So that kind of setup doesn't happen usually. Previously, similar setup happened during October 2017, right? So this time the markets are crashing here because there was an Italian bond crisis happening. So one of the day, so you see that the market opens gap down. and in fact it took down a 3-day low. It took down a 3-day low. It forms an ORR. It forms an ORR. In fact, it's a strong ORR. It's a strong ORR because you see that initially point of control was here. Lately, it migrated over here. It is a strong ORR. First of all, that is one clue that we got a strong ORR because point of control migrated after opening gap down. And the second thing is that it is a G3 as well. So it's one more G3 over there. So again, that is a sign that there are possibilities that market could do short covering rally. So next day, you have to wait for the next day to initiate your trade. Price opens gap up and then does something. Activity confidence was building higher, or you go and get the gap up itself. The expectation is a clear short covering rally, and to clear the G3 levels also at the same time. So maybe I don't have the end result, but the end result was like this. It came and closed about 26,800 or so. Last minute was a strong spike. It went up crazily, and that is where most of the option money got multiplied some 100 times, 200 times, and 300 times, plus 400 times, in fact, one of the options. G2 pattern. First, we also look into G2 pattern as well. Okay, this is how the end result was. The end result was something like this. It's a crazy movement which happened. Something like this. Crazily, see the spike. The spike was happening during middle of the day. It's still not a completed day. That completed day is about somewhere around 27,000. it closely went to the 27,000 levels on that day. A G2 pattern also something like this, but instead of 3 days, it will be happening only for 2 trading days. Very rarely a G2 pattern can convert into a G3 pattern. So a G2 pattern will be happening like this. There will be the rules are same. It has to break the first half an hour high, and then price can end no matter what. It can be ending up or ending down. It doesn't matter. Second day also. Previous day low should be broken. Previous day low should be broken. At the same time, first 1 hour high also get broken. First 1 hour high also should get broken. And what it forms is an kind of an higher high, and it forms a lower high. So that is what it forms a G2. But where the G2 forms, it matters. If it is forming intermediate of the trend, right, then you cannot anticipate a short covering. It could be a potential market top also. If you're seeing a G2 and inventory is getting long to too long, or you're getting stealth auction along with that. So if it is coming at a major market top, that could act like a resistance also. So you cannot play every G2 pattern. So some of the pattern could indicate a market top. Some of the G2 pattern indicates a potential short covering rally. In this case, what you are witnessing is a short covering rally. It was happening like this. The sentiment was negative, value was negative here. The very next day, the sentiment turned positive. Market opens gap up. It tried to got back into the range. Finally, it was doing a dull, boring auction. It was kind of an OA-OR auction. OA-OR. As an OA-OR, you know that how the reaction will be mostly. The first half will be mostly balanced. Second half will be very exciting, and mostly the last 45 minutes, it can even turn to be a spike also. So last 45 minutes, it turned out to be a spike, and thereby it clears the G2 pattern. 70% of the time, a G2 pattern can be cleared on the first day itself. The very next day itself, 70% of the time it can get cleared. And remaining 30% of the time, it can go and clear on the second day. Second day clearing odds are very less, but then that happens usually 30% of the time. Out of, if there are 100 G2s are there, 100 G2 valid patterns, out of that 70% of the pattern clears in the very first day itself. Very rarely it goes and clears on the second trading day, right? Same applicable for G3 also. Most of the G3 pattern, a valid G3 pattern, it tend to clear in first day itself. Very rarely, if the length of the G3 is very long and markets are mean reverting back, Usually it takes 2 days to go and clear those price action. Let's look
I
at
have a question here.
Yeah.
This G3, you say that everyday price should make higher high, but actually price is making lower highs, right? Lower highs and lower lows.
No, there are two patterns in G2 or G3. It's a G3 high, G3 lows. Okay, so the previous example which I shown here, it is making higher highs. It is making lower highs, first of all. It is making lower highs, but it should also break first half an hour high. Every day, the first half an hour high should be broken. That is the criteria I'm talking about here. It makes continuous lower lows. For a bullish,
lower lows and lower highs, correct?
yeah, for lower highs. I'm sorry, I'm talking about lower highs. So for a bullish case, for a bearish case, we'll be seeing a higher lows. Market will be developing something like this. You'll be seeing a higher high and a higher high, and it forms a higher high. Then this low will be considered as a G3 low. We will not attempt every G3 low. So let's say the very next day, price started showing some high confidence, and the daily indicator, the opening is getting negative. Then we go and fade towards those G3 levels. Usually it happens in a day, and very rarely it takes 2 days to continue. This is a bearish case. On a bearish case, you'll be seeing that every day it forms an low, and again higher low, again higher low. So it's a complete reverse pattern. None of the days should be an inside bar unless we have some special condition, unless the inventory is getting long to too long or something. Only in that case we'll consider special cases. Right. To summarize, which one we look into it. So we have a classification over here. One is called the G2 high, G2 low classification.
Sir, inside bar means it should not be under value area, right?
No, I'm not talking about value area. It should, inside bar means it neither breached yesterday's high, it neither breached yesterday's low. It's completely an inside bar on the daily charts.
Sir, can you please go back to that G2, the last screen, please?
Yeah.
Huh. So inside bar means what, sir? Here?
Let's say one of the day we have the today's range is completely trading inside the previous day's range. What is the range? Yesterday's high and yesterday's low, we call this an yesterday's range.
Right.
The price is completely trading inside that. On a daily chart, you get an inside bar.
Right.
It never breached yesterday's high also. It never breached yesterday's low also.
Okay, fine, sir. It should not be inside the bar.
Yeah, it should not be inside the bar. That
Fine.
is the condition for G2 also. That is the condition for G3 also.
Sure, thank you.
And only in that case we can anticipate then comes one more level of validity. That is where we look into the bell trend analyzer. So anyways, I want to talk about, first we'll look into the patterns. So we have a G2 high. Okay, next, how a G2 high will be? The G2 high will be formed something like this. It forms like this. It forms like this, kind of a cheating pattern. No, it's not. So it comes like this. Comes like this. It forms a lower high. Sorry, higher lows. It forms a higher lows. And here, this is the G2 high. Am I doing correctly? No. I'm sorry. I'm just.
So these are IRIs, yeah.
Sorry. This is G2 high. This high is the G2 high, where it's a bullish case. This we call this a G2 high. G2 high. Okay. So when you are seeing a G2 high, next day's daily sentiment is very much required. The trading sentiment, if the next day is positive, say next day the market opens here, maybe there could be some rally high. Market started opening above, market started accepting above the rally high. And you are seeing that 9:15 or 9:20, you are seeing that the sentiment is getting positive. That is where you have to go and trade towards the G2 high. At times, if it is in Bank Nifty, at times it could be 400 points, at times it could be 500 points. You never know. That kind of opportunity comes once in a while, once in every 2 months or once every 3 months once. It frequently comes in Bank Nifty. At times it could be only 300 points. At times it could be 400 points. At times it will be only 200 points. So, but there are many times you will be able to get that kind of bigger odds as well. And usually your expectation is to go and get the G2 high. Your target is G2 high. Expectation is within T plus 2 days. If you look into the value area would be formed lower. Value area would be formed lower, but despite that, you have to trade against the value area over there when there is a G2 high is there and next day sentiment is positive. So I was talking about the trading sentiment, right? So it looks something like this. So it was looking like this. This is on AMI broker chart. Same thing you'll be getting in Ninja Trader as well. So right click and if I go to indicators, say Bell Trend Analyzer.
Trend analysis is free, sir?
No, it is not free. Okay. So what this code is all about, it is a smooth, responsive tool. It is not MACD. So it oscillates between plus 100 and minus 100. It usually tracks short-term trends. If you see the short-term trend is up, your price is also up. Most of the cases, it's down. It is also remains down for the period. So most of the time, it is also noisy, but not that noisy. It will be very less noisy. And even if you look into the recent trends, markets are going sideways. This is still maintaining in a positive mode. Still, no matter what, the positive mode is going on there. And that means a change in trend. Most of the times, a change in trend will be coming like this. There will be a change in trend. There will be a change in trend. So what I am saying here is that if you are seeing an G2 high, there is a G2 high formation. There is a G2 high formation. No matter what the sentiment is here, this sentiment can be anything, positive, negative, or mix of positive, or positive, negative. But very next day at the morning opening itself, you are seeing positivity. Go and get your expectation is towards the G2 high with a strong short covering rallies. Okay, so this is the indicator. It's a combination of green and red. Green means it's in a buy mode, and red means it is in a sell mode.
So what this indicator tells us, I am not getting this point. When to buy it? When indicator shows what?
At the morning open. At the morning open around 9:15 when the market is opening on the daily charts, if that indication is turning positive, when you're having a G2 high, what you have to do is that very next day sentiment you have to monitor. When the very next day sentiment is turning positive,
means green candle.
Yeah, previously it was red color, and today it is, no matter what color it is, next day it should be positive. Then only you can go and attempt G2 high.
So right. Positive means what if it goes more than 15, something like that? Huh? Positive means? Oh, okay.
I'm not concerned about numbers. I'm not concerned about numbers. I'm neither concerned about any of them.
It should be above zero. It should be above zero.
No. It should be positive. See, these are responsive indicators. Ramesh, your voice is cracking. So what I'm saying is that here we are not concerned about any of the levels. Okay, it's very responsive thing, means it goes up and it comes down. Every time it is increasing. Every time it is increasing compared to the previous day's range, you'll be seeing an positive value. Positive value. As long as the numbers are keep increasing compared to the previous day. If the slope is getting declined, means compared to yesterday, if yesterday is 99 and today is 98 today is 98.7, today is 98.7, then it becomes red bar, right? So you see this red bar coming in, and next day again 88, 66. Every time it's keep on declining, no matter what the daily candle is doing, you'll be seeing the indicator is turning negative. Let's say, but one of the day it is minus 55. minus 55. The very next day it is turning to minus 54, minus 54. Then it becomes a green color bar. So if it is in a positive slope, it will be printing only positive green color bars.
Above.
So as long as it is printing green color bars, or the very next day, the 9:15 or 9:15 or 9:20, you should be able to see a green color bar at the open itself. Then only you have to go towards a G2 high.
Okay. Sir, without this analyzer,
Without this analyzer, there is one more less variant of it. It's closely equivalent to this. We call that a hull of RSI. You can get it for Ninja Trader. As of now, Ninja Trader 8 we haven't made it, but Ninja Ami Broker and Ninja Trader 7 it is available, I guess. So HRSI Ami Broker, we can get it in Ami Broker. The same code. Hull of RSI. Here is hull of RSI. It is nothing but an hull moving average applied on top of the RSI, which is a smooth RSI, by the way. That indicator is available in Ninja Trader 7. I have to recode in Ninja Trader 8. I haven't done yet, but yes, maybe we can do it shortly. Where you can see the slope. Either the slope can be positive. The slope can be a positive. It's not shown in histogram, but it is positive or a negative, something like that. That you can also get in trading view charts also. So if I go to the indicators, my script, it's called as an hull RSI.
yes.
You'll be getting this. Okay, instead of this is red color and this is green color. Okay, now you'll be getting a sequence of red and green, red and green. Let me go to Nifty. It will be closely matching with the sentimental values, whatever the sentimental values currently it is showing up. So it's also last 4 trading days it is maintaining positive. Still it is holding positive. But there are times you might get a whipsaw here where you don't get a whipsaw over there. Right? So in belt analyzer you won't get a whipsaw. Usually you'll be using a period of length 7. This hull of RSI is available to everyone. Maybe you should be able to go to public library and you search for hull RSI. Hull of RSI. I published some time back. Sentimental RSI. Maybe I would have published under some other name. Yeah. So sentimental RSI again, which is nothing but hull of RSI. Let's check trading view. Here it is. Here is the PineScript view code for hull of RSI. If you are a PineScript user, you can make use of this information also. It closely matches, but the one which we had is more responsive than hull of RSI. Hull of RSI itself responsible. I mean, how hull of RSI is itself responsive, but what is even more responsive is the tool which we are using, the bell trend analyzer or the turbo RSI is even more responsive. Okay, so that is a sign here. If there is a G2 high and next day you are seeing a positive trading sentiment at the open, this you have to watch out on the daily time frame. The trading sentiment you have to watch out on the daily time frame. On the daily time frame, if the opening itself is staying positive, then go and get towards the target. But if you are seeing an G2 high, if you are seeing a G2 high, next day is negative. Next day is negative and it is coming not at a major swing high, but it is coming at an intermediate of the swing. Then you should avoid it. Don't try to play it. It may not get cleared at all. It's something like you're seeing an G2 high. There is a G2 high there. That high is there. Maybe market would have opened gap down, and the sentiment was holding negative at 920, 915, 930. Whatever your time frame you're seeing, it is negative. So you have to avoid. Don't try to fade the G2. Don't try to fade the G2 because it's still holding negative. When it is holding negative, avoid fading it. Which is not going to work most of the time. So usually you will be getting, whenever there is a G2 is there, most of the time you will be getting this kind of patterns. Most of the time you are going to get this kind of patterns. Most of the time you will be end up not playing against G2 high most of the time. But these kinds of patterns, G2 high formation and next day staying positive, is kind of, it used to happen out of 100 G2s are there. You're not going to trade all the G2, right? So out of 100 G2s, then very next day, the sentiment is going to turn positive is only 33% of the time. Only those time you're going to take a play, right? So most of the G2s you are going to avoid. Not every G2 or not every G3 you are going to fade. Because you're having a G2, it doesn't mean like price has to come over there, right? So we'll be taking that daily sentiment as an assistant to fade or not to fade. And in fact, at times it helps you to take a trade also. If that G2 high, you are having an next day it is negative, means market there was a swing is coming in. One of the day you are getting this pattern. It's a G2 pattern. It's a G2 high. Next day sentiment was turning negative. Maybe price opens here and it falls down. 915 or 920 you're seeing that market is trading lower. The sentiment is getting negative and it is at a major swing high. Then it could be a potential top. Then it could form a potential top. One of the examples is the Karnataka election, which I had shown. On the Karnataka elections, we had the similar patterns over there. So this is Karnataka election dates. On the Karnataka election, it forms a G2 pattern. So this is nothing but a G2 pattern only. It's a G2 pattern. Again, it's a G2 pattern. The very next day, market opens here. By the opening itself, sentiment was negative. And we also have a G2, which is also coming at a major swing high. It's a 3-month high. So that is why we call as a back-to-back secure high also. It is a G2 high also. And this day is an excess also. This day is an excess day. On the daily charts, you would be seeing this. Price opens here. There was sharp wick and sharp downward wick also. It comes in like kind of an excess pattern. Excess pattern, it's an indication of a top. Back G2 coming at a major swing high, it's a top. It is also a back-to-back secure high. And the very next day, sentiment was maintaining negative. All are clear indication that markets are going down with a potential market top setup. So here, from here, it went down 10,450 levels. So almost the correction came 350 points from here. Right? So here itself, you'll be able to spot a top because that day is an excess. Next day, there is no follow. Next day, there is no reversal coming on the upper side. Next day, one more back-to-back secure high forms after Karnataka elections. That itself a confirmation of a market top because it is combining with an excess. Next day, one more. We have a G2 high. This is your G2 high, which is coming at a major swing high. Next day, sentiment is turning negative. That is again ensuring that that high is gonna stay there, right? So all these are key indications of potential market tops. So next day, what we'll be doing is that we'll be collectively talking about the set of how we can identify what are the ways a market top or what are the ways a market bottom could come over there. How you can recognize those potential market tops and potential market bottoms. What are the information you have to check before saying that it is a potential market top or a potential market bottom? What are the information you have to look out for? And so we have some 10 to 12 varieties of identifying a market top. One among them is a strong ORR, and another one is an back-to-back secure high and G2 high, G2 low. So these are potential market tops or the bottoms in the markets. So again, the G2 low is nothing but the reverse scenario of G2 high. If there is a G2 low, next day you're seeing negativity, then go and attempt the target levels. So G2 low will be mostly coming like this. In that case, this low will be considered as a G2 low. And next day you're seeing market showing some sort of negativity. It used to go and test towards the G2 high with a greater accuracy. So the key thing is here is that the negative daily sentiment. Daily sentiment, you can use bell trend analyzer, or you can use turbo RSI, you can use hull of RSI, or you can also use any other trading sentiment analyzer. But ensure that it is a smooth, it is giving you smooth responsive turns. When the market turns, it also turns really faster. It should not be late, and it should not take a lot of time on the daily charts to take a turn. Right? And if it is whether it is a Nifty or Bank Nifty, we use primarily period of 7, and so far we are able to identify most of the quick turns when we are classifying a G2 or a G3. And again, if you are seeing contradicting results between if there is a G2 low and next day still stays positive, then it's coming at an intermediate level. Try to avoid that situation. Maybe it may not, that G2 low will not clear at all. So maybe you have to go with the confidence. You have to go and read the market confidence and attempt the day with the market confidence levels. Don't try to attempt towards G2 low. As long as the sentiment is staying positive, despite the G2 low is there, better don't even look into G2 low at all. Right? So maybe you have to look into what the market confidence is saying, go with the market confidence, whichever the direction it is indicating. And next comes the G2 low. The G2 low, and next day it is staying positive, which is coming at a major swing. It's supposed to be major swing low. It's supposed to be major swing low. There's a small change over there. It is an indication that it could be a potential market bottom. So again, the G3 also somewhat similar setup, but here we will not say like it's a potential top or a potential bottom. But the only thing is that the first two case remains the same. If there is a G3 high and next day positive, go towards the G3 high, and the expectation is in next T plus 2 days. If there is a G3 high and next day is negative, but that G3 is coming intermediate, then you have to avoid it. As simple as that. It's same thing. But the G3 high, whenever you're seeing a G3 high, a G3 high will be coming like this. G3 high, G3 high. This high is a G3 high. And next day, if the sentiment is staying negative, means market would have been opened here and started moving down. In that case, you can expect a temporary downtrend, but eventually this downtrend, whatever the downtrend is coming in here, will be completely restored back in a very short term. So what you can expect is you can expect a short-term downtrend, but eventually the price will scale back again towards the G3. That's what you can anticipate.
Oh, sir, can you show me this one in one live scenario where we can...
The G3 high.
G3 or G2 high, anything is fine.
Yeah, I'll show you in US markets.
So Nifty, it is better, sir. See, sir, Nifty.
Yeah, Nifty, I have a lot of examples.
Yeah.
In fact, last month, so one of the thing you see that the past chart, it will not plot G2 or G3 high, because the setting is done in such a way that you have to go to the settings and you have to increase the length of G2 and G3. In that case, you will get more clarity. So by default, it will be looking for only the last 10 trading days. You see that all are looking into 10 trading days. Only those references will be plotted. Otherwise, you'll be seeing too many cluttered lines. So only for G2, G3, what I'm going to do is that I'm going to put instead of 10, I'll say 20, 30 trading days. So that last 30 trading days, if there are any G2, G3, it will plot those reference levels.
Sir, these are there in Finalgo? No.
See, G2, G3 are proprietary setups from market calls. It is available only in Bell TPO.
Okay.
And Finalgo is nowhere related to that. So here, it was there in December or November. Start of November it was there. So maybe what I can do is that I can go and show you one of the daily commentary from November Tradezilla. November Tradezilla. Okay, maybe I have it here. Zoom to here, November Tradezilla. Let's say 13th or 15th, some other trading day, we get it. I'm going to put it in the mute. We're talking about market confidence. So you see this case. Okay, I want to talk about many. This will go to multiple G2, multiple G3. It's not here. No, maybe around 26th or something. Somewhere around 26th. Okay, here we go. Right, so look into this picture. This is during, yeah. So this is in Bank Nifty. Bank Nifty on 22nd and 26th, there are G2 low. In fact, there is one more G3 low. Is it? There are three G3 lows in a row. Three G3 lows in a row. I still remember none of the G3 lows got cleared. It took it up. It took a short-term uptrend. But lately, when the Madhya Pradesh, Rajasthan results are there, those levels got a clear. So those levels, if you look into during 26th of November, the G3 lows, three G3 lows are there in fact. So one more G3 level is not visible in this chart, but total three G3 lows are there on 26th of November below 25,900. Three G3 lows. So what does a G3 low means? Temporary uptrend. If it's not getting cleared, you can see a temporary uptrend, but eventually all these G3 lows will be revisited in a very short term. So I'll go and show from the daily chart of Bank Nifty. So if you look from the daily chart of Bank Nifty, all those G3 lows got cleared in By 11th December, all the G3 lows got cleared. When it was coming down, it cleared all the G3 lows. Still, so the levels which you are watching out is on around what level? Below 26,050, right? So below 25,900, 25,800, 25,900 and 25,800. So this is where a lot of all the G3 levels we had 1 and 2 and 3, all the G3 levels here, it got a clear finally because you have a G3 setups. All the G3 setups are, it brings temporary uptrend. When you have back-to-back G3 or double G3 or a triple G3, this is a triple G3 over here. 3 G3s in a row. None of them got cleared. All 3 G3 levels are there. It took an uptrend. It went till 27,000. Again, it completely given up all the 1,200 points. Whatever the 1,200 points it made, it completely dropped down by this. The similar setup was there in US markets. In fact, they had a.
This is a 3 G3 level, 3 patterns.
What is that?
How this is a 3 levels? Where are the 3 levels of G3?
It will be coming like this. One of the day you'll be seeing an high, 2 and 3. So this will become a G3. Okay.
Yeah, on this chart you show that you drawn the lines now.
Yes. So now again, let's say one more pattern it comes. These 3 days, it will be considered as one more G3. It forms a G3 level. It forms a G3 level. And again, it forms one more like this, where every day it forms a higher high pattern. At the same day, it also makes a lower high as well. Lower high, it makes every day it breaks the first half an hour high. And that is where none of the days are inside bars. That is why it forms one more G3. This is not a potential market top at all. Maybe what we can see is some temporary uptrend, but eventually everything will get faded out.
Okay.
So now I'm going to show you the same pattern which is running in US markets.
Rajendra, one question on this.
Yeah.
So this triple G3 that we're talking about, the bank Nifty,
Yes.
it got cleared. Does the trend continue downward after this, or
no? It stopped. It stopped there and then exactly reversed from there. Yeah, it reversed and then it again. Rest is we are right now. From here, this is the election day. Election date we had a gap down, and from there onwards it's straight one-way path of recovery, right? So, but that the only thing is that it is not secured. But you can ask one question, right? So when I'm having this kind of continuous 1, 2, and 3, 4, 5 every day, you see that the sentiment was positive here. Sentiment was positive here. So you would have been never traded against a G3 high. I mean, you would have been never trade against all those G3 lows. Since it is positive, what you have to do in this scenario is that you have to wait for the market to go to a long to too long scenario. Inventory perspective, this uptrend is going to continue. Maybe somewhere you will be getting indication that inventory is getting long to too long. So here inventory is getting too long to too long. In that case, you can anticipate a correction. Right now, what I'm going to do here is I'm going to connect to the US markets. I'm going to show you how the setup was there and how the back-to-back G3 had formed. It formed very recently. Last month it formed. So of course, we have access to those information. Currently, I'm monitoring it. Still not a short, but somewhere there is one more deep fall is going to take place in US markets. So let's say, I'm not sure how the Indian markets will react, but one more US market drop is likely. I'm going to disconnect this. I'm going to connect to my kinetic. New chart. So yes. Yes. I have a pre-template available with me. It's CS Mini. to set the TPO size as 1 point TPO. Otherwise, you may get wrong AB poor lows. They are not AB poor lows because of wrong TPOs. So 1 tick TPO and tick size is 0.25 in ES mini. It's here. I'll again right click and go to indicators. I'll set some last 30 trading days. G2. I'll make it as last 30 trading days. Otherwise, it will plot only for the recent 10 trading days. If there are any G2, it will show you. But I need for last 30 trading days. If you look into the top, the recent top, I mean the recent bottom also. I'll talk about the top also later on. The recent swing low. It is a what? It's a G3 low. Look into it how the activity happened. One of the day it went down. It went like this. It forms a low. Next day, the high. It forms down. It forms a lower high. Third day also it forms a lower high. That is where it becomes a one of the low is a G3 low. And again, it forms one more similar pattern. That is why the second day also a G3 low. So when you are having a back-to-back G3 low, it is an indication that it cannot be a secure. We don't treat that as a secure high, but immediately we can expect some uptrend to kick in. That is uptrend which we are okay. You should not try to fade here because you see that the auction is still higher. Whenever the G3 high is not, it's coming at a major secure low. I'm sorry. If the G3 low, back-to-back G3 lows are coming at a major swing low, that low is a major swing low. In fact, it broken 5 quarters low. It broken 5 quarters low, or it broken 1 year low. 1 year low. After breaking the 1 year low, it is forming a back-to-back G3. Back-to-back G3 is not at all a secure high. Temporarily, we can anticipate an uptrend. So from here, the uptrend was continuing. It almost done 150 points recovery from here. After doing 150 points recovery, so the recovery is not faster one, it's a very slow and steady one. And in fact, there is one more G2 low also that is not got cleared because the sentiment was still holding positive. Somewhere this will go to long to too long. That is where you have to start attempting towards that back-to-back G3 lows. That's why you have to attempt towards that back-to-back G3 lows. Means that lows are not secured yet. That lows are still, these lows are not secured yet. Maybe either in February, we might be reaching these lows back again, or in March, somewhere in February or March, we'll be back to these levels. So whatever the uptrend is going on in US markets, I don't know about Indian markets. Indian markets, we are not able to spot any weakness yet. Weakness, if at all, if it has to come, it may come around 11,000. But as of now, there is no weakness yet. So that G2 back-to-back G3 low is there, which is what it tells me that market could revisit those zones. At the same time, we also had a back-to-back G3 high also. I think some of the G3 highs got cleared, I believe. So one of the G3 high, it was there, it got cleared. One more G3 high, it's a back-to-back G3 high. That back-to-back G3 high got cleared. When the price was dropping from here, we got a back-to-back G3 high. So G3 high was there. As I said, if back-to-back G3 high is not cleared, temporarily we might go down, but eventually we scale it back. So that we had done. So that almost took how many days? That almost took that G3 high got cleared on 9th Jan. Till today, that is a high. And in fact, it is a back-to-back G3 high, if I am not wrong. There is one more G3 high is there. There is one more back-to-back G3 high is there. So maybe this trend could extend even up to here. Who knows, right? So there is one more. There's one more back G3 high. There is one more G3 high. One more G3 high. Total 4 G3 highs are there in a row. 2 got cleared, and the remaining 2 is there. 2 G3 highs at the top, 2 G3 high, G3 lows at the bottom. So you can anticipate what could possibly happen. So still the inventory is not long to too long. I'm not seeing any, the auction, the entire auction was still holding strong. Okay, so you can see that kind of strong auctions in the form of single prints. As I said, these single prints are indications of a strong auctions. You can see this strong auction here, strong auction here, and again one more strong auction here. So these are 3 auctions where you can see stronger auctions. The auctions are getting stronger there, and still they are not willing to give up. No weakness, no poor lows, no prominent point of back-to-back prominent point of controls, no point of control migration. I mean non-migration and prices migrating higher. No such kind of setups. Don't try to fade this now, right? That's the thing. You have to wait. Maybe maybe the market could be something like this. Maybe what could be anticipated is that somewhere here when it is reaching the G3 high, inventory might get long to too long. That is where you can focus towards the other back-to-back G3 low, right? Which is kind of a crazy thinking, but yes, this is a thought which is exactly running in my mind as of now. But inventory perspective, still they are not getting long to too long. Only I'm seeing a fresh flow of money coming in, and that could go another 100 points from here. And 100 points will be at 2,700, right? Another 100 points in ES Mini. Maybe that will completely dry out this entire month. But at the end of this January month, you have to be really cautious. February month could be, and they could turn a negative turn. February, or in worst case, they might balance over here. They might take a long time to balance in the entire February month, kind of sideways. And March month, they could take a turn. It's going to take a lot of time. So, but you should aware about these G2 and G3 and go up with your routine procedures. That's it. So you cannot play a bigger game here. All you can do is you should remember that both there is a G2 high, a G3 back-to-back G3 high on the lower side also. There is a back-to-back G3 high also on the top. Both has the higher odds of clearance. So you have to keep this in your memory and take situations accordingly. You never know which one is going to clear first. But maybe as of now, I'm not seeing any inventory getting long to too long. What I'm seeing here is that there is only a 3-day balance formed. Even if it's form a top, one other way we form a top is that a major swing high, a 4-day balance. We'll get a 4-day balance where all the day will be getting an overlapping value area 1, 2, 1, 3, and 4, and then it initiates the direction. In that case, a top could get confirmed. In that case, and we'll say like a 4-day balance market could form a top if it is coming at a major swing high. In that case, a top could get confirmed. Otherwise, if let's say if market started forming an value area higher on Monday, again that ignores the situation.
But Rajendran, after a 4-day balance, will it normally do we see the pattern, or what is the probability of?
When it is when a 4-day high, I think I haven't connected. I connected to the data, right?
Yeah, the connected.
Connected to the data, but. 1 second. Things are good, but 2595.
This is behaving similar to, I mean, our markets are behaving similar to US, or US markets behaving similar to our market?
No. This is US markets only. They are not behaving similar to our markets. In fact, they are outperforming Indian markets as of now. Okay, still there is only 3-day balance. Maybe if there is one more day of balance, then we can consider for the next day follow through. If there is a follow through coming after a 4-day balance, then it could be, we can say like it's a potential top, then probably it's the right time to approach towards the swing low. That is, market could be topping out and they may take down the G3 low first rather than taking the G3 high first. But if the value, if Monday is not going to be a 4-day balance, instead value started building higher, maybe G3 high, still we can say like still the inventory is not getting long to too long. There are no clue as of now. Nowhere I'm not able to see any clue that inventory is getting long to too long. So we have to wait for the uptrend to complete. Once uptrend completes, somewhere we will get that completion auction there. Either it can form some sort of an excess to indicate a completion, or it can show that the inventory is getting long to too long, or back-to-back prominent point of control, or multiple prominent point of control. Somewhere it creates more weaker reference. As of now, are there any weaker reference? There are no weaker reference. There are not even a stop loss over here. So when the markets are moving in such a fashion, I'll still consider this as a healthy auction. I still consider this as a healthy auction. Don't try to trade against it. Always, every time, look for a weakness on the short side, right? So every time price drops below the previous day low, it started coming back into the reference. You go look for a long trade still. Don't try to, because the auction is still continuing in a long fashion. There are no weaker reference level. You have to go with the auction truly, right? So unless some sort of weakness coming in, then only you have to look for a positional downtrend. That positional downtrend is going to come, but the question is when. Either initially first they're going to clear the G3 high, followed by that G2 high. That is the only thing which is running in my mind. So far what I'm thinking is possibly we will going and hitting 2,700 levels, clearing all those G3 high. Maybe there we have to look for any completion of the auction or not. If there is completion of an auction or the inventory is getting long to too long, that is where we can take a reverse direction towards a deep plunge. Right, so maybe that again one more nasty downswing could happen, kind of a double bottom kind of setups, which can go and test the previous swing lows. But in terms of time, it's going to take a long time. As of now, there is no weakness I'm seeing in ESB. Okay, that's the kind of environment right now we are in.
From a market opportunity perspective, Rajendran, which is the most common, right, opportunities that come up in the markets, Nifty and Bank Nifty markets?
Most opportunity. The G2, G3 gives most of the opportunity in terms of intraday perspective. In terms of intraday trading perspective,
what are the most common types of opportunities that we see in our Indian markets?
Okay, so
common ones.
Common ones I'm talking about. G2s are common ones, G3s are not common ones. So G2 high, G2 low, it happens commonly. G2 lows, it gives maximum opportunity in terms of risk reward ratio. A max opportunity will be there. So I'll give a top priority to this. Second comes the failed auction. In case of indices, we follow it, failed auction. Whereas G2, we follow for stocks also, we follow for indices also. Indices also, we'll follow for stock futures also. Okay, FA, we give preference only to indices. Third is back-to-back point of control. A G2 high or G2 high or a G3 high, which is coming at a maximum, at a major swing high, G2 high or a G2 low coming at a major swing high. This gives positional opportunity. This gives positional trading opportunity. In terms of Nifty, it could be anywhere between 200 to 300 points. In terms of Bank Nifty, it could be anywhere between 500 to 1,000 points positionally. And fourth is exponential point of control. Exponential prominent block. That is like 4 prominent point of control in a row. Anything more than 4, we'll say like it's an exponential prominent walk back to back. 4 continuous trading days, you are getting a prominent point of back-to-back prominent point of control. Again, it gives you tremendous positional trading opportunity. And 5 exponential poor lows or poor highs. Again, it once happened recently in US markets. That also I recorded it. Maybe I'll show you those articles as well. We call that as an exponential poor high I think I recorded once in S&P, I think. It happened somewhere during 2017, mid of the year last year.
Rajendra, can you show the example of back-to-back POC after this?
I'll show you shortly. Just give me a second. First, I'll complete this. I shown you in HDFC Bank, no? I shown you in HDFC Bank. I also shown you in Bank Nifty.
Okay, I just want to see it once again because I got confused with the. Is there any difference between the POC and PPOC?
Prominent point of control, you will have more than 10 trading activity at the center.
Okay, more than 10. Okay, that these contains any gap between the TPOs?
No, not necessarily. But all the prominent point of control will not be cleared. Anyways, I'll talk about it again once we're done with this session. I'm just looking into somewhere during last year, middle of the year, we talked. I think this is the one. You think about it. Look into this information. It's a poor low, one poor low, two poor low. It's not cleared. Third poor low, fourth poor low, and fifth poor low. And you could imagine what could be the end result. The end result was like this happened in 4 trading sessions, and I'll show you the end result also. I recorded the end result also here. So these are the 4 poor lows, and one of them is a poor low plus a weaker low. So 2782. So how it is? You can see here it's a poor low because one of the day it's having a poor low. It is also weaker low because exactly it is matching low. So that's why we saw like poor low plus weaker low, one more poor low, one more poor low, one more poor low, and one more poor low. So what does it mean is that one of the places where the inventory is getting long to too long, whoever trading here are only shorter time frame buyers, and you can expect a short-term inventory correction to happen, and the inventory correction happened like this. The very next day, there was a Fed announcement. Initially, it formed a AB poor low. The Fed announcement was supposed to happen, and that day, middle of the day, you are seeing an AB poor low over there. Price also broken the 2-day high. 2-day high has been broken. A Fed announcement was supposed to happen, right? And once the Fed announcement came, it completely erased all its gain. It also broken the broken that day's AB poor low. It broken yesterday's poor low, which is also back-to-back poor low. It broken that, and finally it gave up all its gains. So all its gains, all the poor low situation, most of the reference level, it got cleared in a span of 4 to 5 trading days. It got cleared. So these kinds of setups, so far in Nifty in the last 2 years we had seen twice. One in November 2017, last time it occurred, and prior to that it occurred May 2016, if I'm not wrong, May 2016, and it was exponential poor highs. Whereas November 2017, what we've seen is a combination of exponential poor lows and a prominent point of control. November 2017, yeah. November 2017? No. Not November 2017, but November 2016. Right? But these kinds of setups will be happening in stocks also. Stocks also, it represents the same thing. But the only thing is that you have to look with the optimal odds. But if you're going to use a bigger TPO size, you will get an poor lows everywhere. So don't use. We are looking we are looking for a very precise pinpoint poor highs or poor lows. That is where we say that short-term presence is there. That is why you have to look into an optimal TPO size. If you're going to use a higher TPO size, if let's say your TPO size in Nifty, you're going to use 5 or something, you will easily get a poor low or a poor high, right? So don't look into that. You will mesmerize and you look like every day looks like a poor high. Always when you're using Nifty, currently use a TPO size of 1. Even for Bank Nifty, I'm using a TPO size of 1 to check at that precise levels. Are we getting a poor high or a poor low? If players are that visual, if their players are looking into that visual reference level, then definitely they are trading money. And if the markets are showing exponential poor setups on the higher side or on the lower side, that brings you exponential odd to fade against everyone. You will have a greater belief why you should trade against everyone, why what could happen and how the reaction could happen, how the long liquidation happens, or why the short covering rally should happen. You will have a strong explanation to that, right? And in fact, when it comes to Nifty also, we have back-to-back G2 levels. Back-to-back G2 levels at 10th, one of the level is at 10,960. 10,960. And another one is at 11,012. 11,012. No, sorry, not 11,012, but 11,003 or 2, somewhere around that. We have a back-to-back G2 currently. That is why I say like the current upswing also not secure. Maybe initially we could test Jan 1 high, but this back-to-back G2 is also not a secure high. If it is only one G2 high, it is secure. But if you are seeing 2 G2 highs back-to-back, it is something similar to back-to-back G3. It is also not a secure. It is also not a secure highs. So that is why precisely I went neutral on Friday, because I don't want to get into bearish because of value is getting lower. We are still trading inside the balance. Still, there is a back-to-back secure, back-to-back high at the top, which is an indication that it cannot be a secure high. It was secure high once, but later when the recovery came towards 10,960 levels, it becomes one more G2. It forms a back-to-back G2. Maybe I'll show you the back-to-back G2 also. So all I have to do is that I have to close Ninja. I have to reopen. Maybe previously we haven't talked about it because you people are not aware about the consequences of G2, G3. But now it's the right time to talk about it, I guess. I don't want to put everything in the first shot itself. So. Okay, there is one G2 high, but there is one more G2 high. If I am going to draw a right click, I'll go to extend the information. I'll go to indicators. And if I say look into last 40 trading days of G2 or G3, say 30 trading days. In the last 30 trading days, we have 2 G2 levels, the back-to-back. Now you'll be seeing the back-to-back G2 levels. That's what I say, like this is not a potential swing high. Initially, it was when one G2 forms, we got a drop, and then it forms one more G2. That is why it forms a back-to-back G2. And still We went down again. We are trading back just to repair these levels. So these are the two levels which I'm anticipating. I'm expecting one more level of testing 11,000, but I'm not expecting anything beyond that as of now. So this G2 high also matches with Jan 1 high, and now in this again another 30, 40 points from there. One more G2 high is there. That is the max expectation as of now for this series on the upper side.
But Rajendran, positioning for this kind of a trade,
yeah,
wouldn't be too.
But the only thing is that markets are testing the patience for a very long periods by just getting into a sideways action. But the context never changed. Still, the context remains the same. And Monday, I have to resume longs again. We tested longs; it is not working out. But Monday again, we'll resume longs again. If at all, we are gonna get an acceptance about this rally high again. Right. So there are no weakness yet. There are once the weakness comes in the form of short term, in the form of a stealth auction. That is the only one weakness we spotted out. That weakness came and then it got restored back. So that we call it as the inventory corrected, but then it is a very short term inventory correction. That's it. It's done. So you don't need to you don't need to worry about it. So there are many cases. What happens in a good uptrend? In a good uptrend, the inventory happens something like this. So let's say
that's a P pattern, no? That's a P shape.
Which one? No, it's not a P shape. It's not a P shape. So in a good uptrend, what happens is that one of the day inventory goes long to too long. One more balancing happens. One more day balancing happens, and the inventory corrects. But then you see a strong inventory correction, but it restores back. Again, it gets into sideways mode. Again, it forms a fresh auction uptrend. It again resumes uptrend. So most of the earning seasons goes like that, where you see an inventory getting long to too long. And there will be an inventory correction, but that inventory correction will not last long and again resume. Again, inventory goes long to too long again. That doesn't last long. You will get one more inventory correction, but they will rotate back. So market will be moving in that kind of fashion. So not every time, every inventory correction has to be strong. At times, inventory correction stays strong, and you will get a follow through. But sometimes what you'll be seeing is that, especially during earnings season, especially talking about earnings season, inventory will go too long. It corrects, but then it instead of follow through, it will restore back, and again inventory pileup happens. Because most of the inventory earnings season, the institution play will be very high. Most of the funds are macro funds, so they might be piling up. Every time there was inventory correction, they use as an opportunity to add up. Let's see. So I went neutral. I'm serious about getting into longs on Monday again. This time maybe with some bigger position again on Monday onwards. Let's see.
Just going back to the Nifty chart.
Yeah.
What your observation? So it's the last 15 minutes of the Friday.
Yeah.
Last 15 minutes. The last 15 minutes white candle. Last.
Yeah, I seen that.
This one. So this drops. So there was a upward.
30 points.
30, 40 points movement, and suddenly in the last 15 minutes there was a kind of very strong sell-off.
Yes.
Sell-off. What do we make out of this? Is there some meaning to this or
nothing? Just only to scare the participants. So ideally, it's a rally high, right? It's a clear rally high, and still that rally high context remains the same. So if it is a good market, price accept above this and started trading above this, it's a high confidence environment, right? So this is why you have to look for a rejection or a acceptance. So opening, if it started, it opens here, I'll initiate a trade and I'll monitor, and I'll exit if I'm seeing something like this. I'm gonna exit there, and I'm gonna stay away from the markets.
So these last 15 minutes, these are profit booking for the internet traders or what?
I don't know. How do I know? I cannot read every market direction, but only one thing from the patterns what I am reading, I know that this is a rally high. That I'm very sure about it. This correction, why it happened, I don't know.
Okay, thank you.
But if you look into the anomalies, that is a poor structure also. You can see that 1 and 2 and 3 and 4 anomalies. Maybe previously you may not noticed it. Once I shown it, now you know that that is a poor structure. It's a poor structure. It has the odds of fading everything. So all the odds are possibly set up on Monday. What we need is that we need acceptance above a rally high that brings a high confidence markets. Anyways, this is going to get clear that has a higher probability. Poor structure getting cleared is a high probability. That is an emotional trading day. That is why we get 4 anomalies on that day. So if the day is going to show up with a high confidence, they will start trading above rally high. They will maintain the price above rally high. Again, one more place where we can think about initiating a positional long. Especially Friday rally highs are meant for, if there is a Monday follow through above that rally high, usually it brings positional longs.
Thanks.
Yeah, or let's say price opens here. They went to rally high. Again, they started rejecting here, which is not a good sentiment at all. What we need is, we need a pass through above that rally high. But one thing is that till the last anomaly can get cleared, the price can go up to this point, and that will put the price above the rally high, and more point of control is gonna happen on the upper side. Higher odds that it's gonna, the high confidence is gonna stay, and which is gonna bring towards that back to back G3 G2 levels, back to back G2 levels. If this is one G2 low, if it is not touching, we don't care. I'm talking about this G2 low is very important because it comes at a major swing high. These two back-to-back G2 high came at a major swing high. That is why I'm saying that it is not a secured one. That is why price has still it has the odds of testing towards that. Or if something has to change, right? So if something has to change, let's say price opens here and started going lower, the balance could be broken. It's a broader balance which we are talking about, right? And still, if you want to trade the longs, you have to wait for there is a break, and again price is getting into the balance. That is what we call it. One more terminology like look below the balance and fail, where you can go and test, expect the price to touch the other balance, and again the G2 G3 high. That is then another rule. Maybe next week we'll be talking about it. It's look below the balance and fail. So look below the balance. We have a balance here, and let's say price breaks the balance and it's again getting back into the balance. That's a low confidence. Usually the target destination is towards the other side of the balance, and again that could again bring extension towards G2 high, again the back-to-back G2 high. This is the maximum level I'm expecting for the series, and beyond that I don't have any visibility at all. If it is on the anything on the upper side, I'll be maximum expecting towards 11,000 levels. That's it, nothing much more than that. Maybe any idea when the budget announcement is going to become? Usually it will be on January end or February month end, right?
First. Yeah.
Feb. Okay. So maybe any correction could come in the markets. Maybe we have to wait for that kind of once the first Feb is over, then we have to evaluate again, is the inventory is getting long to too long again, or any kind of top setup is forming. And then if such patterns are matching, then end of the first Feb is what you have to initiate a trade. Nothing before that, nothing after that. Right? So exactly you have to wait for the first Feb to get over. Most of the tops comes on the event days. So if you go and measure, most of the market tops are related to some sort of market news-based impacts in the past. Most of the market tops are most of the market bottoms. So in the meantime, market could do a lot of sideways action or something it will try to do. I don't know. Fine. So I guess that's one more special case I have to discuss over here. I think somebody is creating a lot of noise. If somebody can mute themselves. Yeah, thank you. So there is one more special case over here. where we consider inside bars. Not this one, but there's one more special case. It's left, I think. Okay, this is Dr. Reddy G3 pattern. You look at the pattern. It forms an one of the day high. Second day it forms a poor high. Third day it forms a failed auction. So it was like same setups again here and here. In fact, this high was a poor high. This high was a failed auction. And next day we got a 45-degree line. So the fourth day we got a 45-degree line. See that it's a 45-degree line. And next day what had happened is that it went on clearing all the reference levels on the upper side. It went on testing the 4-day high. So day one attempt failed, but still day two, it formed a 45-degree line. That is still a valid pattern. That still comes under special condition. Means T+1 it is not cleared. So in that case, still the odds are there because there is a 45-degree line is there. Still the odds of going and hunting towards the next day, it still stays there. So you have to stay in the game. So again, if you are out of the game, still you again reinitiate your trade again towards G3 levels. That is one more special situation there. Because you look into this context, there is a poor high, one more failed auction, and one more 45-degree line. All are showing that the 45-degree line is one form of inventory getting short to too short, something like that, where the sellers got trapped intraday. So in the short term, we can expect a short covering rally. That's what the 45-degree line represents. And the very next day, it went up. In fact, that time, there is a G2 pattern and G3 pattern in most of the pharma sectors. It was there in Cipla, it was there in Dr. Reddy, it was there in Lupin, it was there in one more Sun Pharma. So almost everyone does a short covering rally when there was a G3 levels is there in all the pharma stocks, including the sector also. Sector level, Nifty Pharma itself had G2 there, and it does a tremendous recovery. In fact, most of the stocks went 5%, 7% crazily on those periods. Right. If there are any questions, I can answer all those questions now.
Sir, can you share the pre-market Excel which you told last week?
Okay, maybe I haven't sent an email. So once the session is over, I'll send you everyone the pre-market Excel.
Sure, sir. And second one is
what I am planning is that by next week, instead of filling the Excel, we'll be having a portal where you can come and select the values. There will be a lot of drop-down values will be there. You can straight away come and select whether it's a low confidence environment or a high confidence environment, and you can save it on day-to-day basis. And you can able to recollect the previous data points also. So we are building a portal where you can record all those information. Each and every user will be provided a login so they can access it. So it will be available to all the Trezilla members by default.
Okay, sir. And second question is, sir, can you tell me price details of Bell TPO? Because currently I'm using Finalgo. So whatever you have explained, most of the things are there in Bell TPO.
You just check with Mr. Vinod.
Okay.
Yeah, Vinod handles Bell TP operations. So I just give him ideation. Most of the ideations he get it converted. So even now, some of the order flow, we are thinking about some automation. There will be a couple of reference lines which helps traders to spot intraday trading opportunity. We call that as an unfinished business, something like an failed auction. Some new features I requested in market profile also. So something like one more strategy what we will be following is an intraday halfback. At each and every bar level, we'll be looking into a halfback levels. So that we find it interesting. So we want to get it coded. So the next release, he's releasing that. And we are also going to look into micro balance concepts. That is one more special concept. So the tool is getting built on, where you can select a certain range and you'll get a balance over there. That is also coming in. So more new updates are coming in over here. Most of them are based on our past observation. Most of them are, we consider that this is sensitive thing which should be present over there. So I give mostly all my ideas to Vinod. Vinod will analyze. He will go through whether this can be done or not. What is the value involved in it? If you find truly value in that, you go and bring it as an automated reference lines. In fact, scanners also there. Probably by next week we'll talk about all those scanners: the G2, G3 scanners, the failed auction scanners, value high, value area low. All those comes as a scanners over there. So what you can do is that you can one-time settings. You can build those scanners and save it as a template, and everyone can use in their community. So that can be done. So that is also available in Bell Ultimate Pro, which I'm going to talk about next month. Next week I'm going to talk about the market profile scanners, how you can make use of it, and how to set up those scanners. So those are the two things which we're going to talk in next week session. Right? Yeah.
This is without ultimate.
This requires ultimate. That requires ultimate. Yeah.
Okay.
So the basic version, there are no scanners. Basic version, everything you have to do on your own manually.
Okay.
I mean, still everything, it's still manual. I had done everything manually until we automated it. Now the job will be easier. That's the only difference.
Okay.
And what is for tomorrow? What are the topics for
Tomorrow we'll be covering order flow, basic setups, and there are 2 days of session we are going to cover. So tomorrow we'll be covering the basic sessions and some 3 to 4 strategies we are going to talk about it. And one more session we are planning on 26th, somewhere on 26th. There we'll be covering extensive. The entire day we'll be spending only on trading strategies using order flow. And yes, mix of order flow and market profile.
All right, thanks.
Yeah.
Hello, sir.
Yeah. Yes, please.
Sir, so you have sent that order flow link, right? So whatever you took for the Slack community, in that it contains our TradeZilla video.
Okay.
I have sent you the, what is it?
This order flow session, right?
Yeah. The latest the session, the 10, January 10.
Order features and order flow.
Yeah, this one.
Yeah.
This one actually has the market profile video, not the actual order flow video.
Market profile video, you haven't got it? It's there in...
No. Here, in this particular Jan 10th order flow features and order flow trading strategies.
Yes.
I'm not seeing the actual video, I'm saying.
Is it?
Yeah.
So actually, 10th...
Is there, no? Here it is.
No, the actual video is...
Okay. I think probably I uploaded the wrong video. Maybe I do.
Yeah.
I'll try to rectify this. I'm sorry.
Yeah,
I got your question.
Yeah.
Yeah.
Hello, sir.
Yes, please.
Micro profile, is it useful or not? For example, in 30-minute candles, divided into 5 minutes micro.
Oh, no, that is not micro profile, right? So it's like micro balance. It's not micro profile. We call that as micro balance, right? Something like we select a range and we try to evaluate where the point of control is building. So that's a different concept. Maybe we'll talk about it next week. As of now, we don't have a tools to explain, but I can explain once the tool is in progress. It is in beta, so we are testing that tool. Once the tool is done, we can build strategies on top of it.
Yeah, Rajendran, I have a question.
Yeah.
So, before market opens, as an intraday player, you said, we have to do a top-down analysis.
Yes.
That is first thing. So what and all we have to see? Just I need to understand your pulse, what you are going to do between 8:30 to 9 o'clock in the morning.
So most of the time, all these things are going to run in my head. The sheet which I given over here, right? So it's where we'll be covering top-down analysis as well, where the pre-market setup, pre-market where market is likely to open. Probably one more thing, top-down analysis. We can put one more section saying that top-down analysis, where we'll be looking into monthly, weekly, and top-down analysis. So we'll be looking into monthly, what is happening, monthly balancing, weekly balancing, and daily is also balancing. This we will be looking into it, or we'll be looking into like something like in ICICI Bank. If you look into the ICICI Bank on a monthly scale, something was happening really interesting. What was happening there is that it broken 2-month high. So I'll be monitoring the confidence at 2-month high as well. Yeah, ICICI Bank, where is ICICI Bank? ICICI Bank -i.info. I don't think it will get loaded because, yeah. So on the monthly scale, if you look on the monthly scale, it broken last 2-month high. So I'll take some reference from monthly high as well. So that anything, as long as activity is happening above 2-month high, I'll still consider that as a high confidence. So if it's a low confidence, activity has to happen down below previous month high. So a 2-month high. So 2-month high is one of my reference where I will monitor confidence at that location. Right. So for a weaker confidence, if there is a weaker buying confidence, what happens? Price after breaking that, it'll again come back into the. It will again come back below 2-month high. That is also one more reference level. I will take it from the top-down analysis.
Okay. And are you going to see any global markets? What happened in US, China, or something like that?
We'll be trying to evaluate what kind of reaction, what kind of extreme global market is. What kind of is it an extreme reaction? Is it an extreme negative reaction or a positive reaction? That we will look into it. Negative.
So it's anything more than 2%.
Yeah, similar to 2% or a 5% or a 4%. There we will rate it as an extreme sentiment where all the global markets are down. So these cases, all the global markets are down. And all the global markets are down, and we are the last one to open. So NSE is the last one to open, right? Last one to open. In such case, we will be if we are also reacting in relative to that market. So everyone in the global markets are down, and we are also going to open gap down. What you have to look out is, is the price is going to break out a 3-day low or a 4-day low? Then if the price is going to break a 3-day low or a 4-day low, again, those are the places where you have to look for a mean reversion. If they're not a serious sellers, they will bounce back. You have to take it immediately, because most of those days when the extreme reaction is going to come, it will be bottom out in the first minute itself or first 5 minutes itself. It will top out or bottom out. This is the only thing we'll look into it. Otherwise, if it's something like a 200-point crash, 300-point crash, we don't even look into global markets. We'll always go with Indian markets. Okay. Only in case of extreme negative or a positive reaction where all the global markets are down or most of the global markets are down and we are the last one to open, we'll give more importance to the confidence. First 5 minutes are going to be very crucial for you. So your entry will be has to be really faster at the opening itself.
Sir, any priority for US market? Any particular priority?
No, it's totally waste of time to look into it.
Okay. And sir, I have one more. So how you are predicting?
Whomever looking into US markets and trading Indian markets. So you looking into US markets and trading Indian markets. And again, who are looking into crude oil and trading Indian markets. I'm talking about Nifty, Bank Nifty to take long or shorts, or whomever looking into USD INR and trying to interpret Indian markets, are they are nothing but short-term traders. They are trading money. They are short-term traders. They are not investors. Investors will not look into US markets and then they will not take a trade decisions over here whether should I have to invest or not. The US markets are crashing, so that is bad for Indian markets. So they will not look into overnight what happened in the US markets. Who are looking all these players? In fact, the players who are looking into SGX Nifty and are trying to predict Indian markets, everyone are nothing but the short-term traders. They are just from the short-term trading community. Investors might watching for fun or watching to understand how the market reacts, but traders, they really care about these things. So who are caring about those things are, they are nothing but short-term traders. We watch it all the time. We are nothing but short-term traders, right? But are there any correlations from here? Yeah, maybe at the opening the correlation might be there, not necessarily it has to continue. Maybe that correlation might be there for a bigger time frame. But from a short-term perspective, most of the time you try to take a trade against this, most of the time you're going to end up trading against the markets. And even some player will look into ADR also. ADR, US ADR or London GDR, London GDR, they will watch Reliance, State Bank of India, something like that, or US ADR, they will be looking into, let's say Infi was up by 7% in ADR. So every time you see the ADR and try to do the same thing in Indian markets, market will be put you in a difficult situation. Let's say Infi ADR, right? I'll pull up Infi ADR, what happened? Infi ADR went up 7%. You try to trade Infi on Monday, right? That you watch out how the Infi behave. Maybe we track Infi here also. So Infi ADR, it went up 7%. In fact, it created an excess also. You try to see, maybe Infi might open gap up, but it will not give you good opportunity to look for a good move there. Okay, it was just 2.26% only. I don't think so. It's 2.26%. Maybe I'll put it in stock charts. When you watch and trade the ADRs or GDRs, opening you will get a gap up, and then later on you may not get a follow through most of the times. Somebody said it was up by 7%. It's up by 5%. It was initially up by 7%, but later it got settled at 5.36%. So you try to watch Infi because everyone knows this information. You are not the only one who knows this. Infi is up by 5%. So let's look into what is going to happen on Monday. How difficult it is going to trade on Monday. When we'll have a watch on Infi, we'll try to check how it is. What we are going to measure is how it is difficult to trade Infi when there is a overnight market. There is a clue that there is a Infi is going to up by 5.36%. That reaction will be there on Infi momentarily. It opens gap up, but after that, it's going to put everyone who is going to trade longs. It's going to put up in a terrible situations. Right? So watch out how difficult it is. We'll track Infi on Monday. Most of the time, it puts people in the difficult situation. Very rarely there will be a follow through. Very rarely these kinds of bigger situation opens up. In fact, when Reliance results came, one of the time when Reliance was trading at 1,000, results came and it was a Friday. The London GDR was up by 6% or so. 6% or so. Everyone was anticipating a big gap up in Reliance, and that's going to bring a big move in Nifty. When the Monday market opens, it opens flat, and then nothing happened. In fact, it forms a top, and then it crashed some 6% on the downside. Right. So, watching those ADR and GDR, to watch the ADR and to be lucky in a very short term, you have to be really lucky. That odds are very less. And again, the same odds are very less if you're going to watch SGX 50 and you're going to trade Indian markets. Watch USDINR and you're going to take decisions based on Nifty or Bank Nifty. Watch crude oil, and yes, at times correlations will be there, but that correlation will not be there all the time, right? So correlation is like a cycle. Sometimes correlation will be there, sometimes the correlation will be missing. Sometimes US markets are following, we are following US markets sometime back when the markets are crashing. But then lately US markets are crashing in November, but we are bouncing back. Right, so people are wondering why there is no correlation at all. At times you look into S&P future, and crude oil, there will be a good correlation will be going on. Both will be moving in tandem. Crude oil does a short covering rally, S&P also does a short covering rally. But that odds are not going to be there all the time. But yes, most of the time, some 60% of the time, 70% of the time, that kind of correlation will be there. But remaining 30% of the time, it's going to happening, and you are in a position, you'll be wondering why it is not happening in your favor. Why the crude oil is doing a short covering rally, why the S&P is not following it up. So that kind of scenario it comes in. Anyways, better don't watch all these information, and don't, all these things will give you unwanted bias, right? You can only realize by looking into very closely, watch the price action movements of ADR, and try to anticipate, try to check how it is behaving in future. Just by observation, you'll come to know that it's not going to work most of the time. Most of them, it's going to put you in a difficult situation. Yeah, so I'm stopping the session here. We'll catch up.
Sir, I have one more question. So how to predict open value, sir, in Nifty?
SGX Nifty, you can watch SGX Nifty. It's good to watch SGX Nifty around 850 or 845. It gives you a fair picture where the Nifty is likely to open.
It will be plus 10 or minus 10, something like that, right?
No, at times it could be 100 points gap up also. From SGX Nifty, you'll be able to catch up. So SGX Nifty, you can watch out over here. If you haven't watched live SGX Nifty, there are two ways of representation here. One is morning. Where is the morning open? What is the second session? They have two sessions, right? In Singapore, usually it starts around 7 o'clock in the morning, 6:45, I believe. 6:45 in Indian timing. This data is some 10 minutes delayed. So by 7 o'clock onwards, you'll be seeing this data. So if you're watching by 8:45, you'll be having a fair idea. 8 o'clock or 8:45, you'll have a fair idea where Nifty is most likely to get open. More or less, it opens at the same price.
Okay.
And very rarely, something last two trading days is what SGX was positive, but still we opened flat and then we dropped on that. That's the only weird scenario. Otherwise, it mostly follows what the SGX Nifty is going to open. But if you're watching overnight, that's a bad thing. Because morning, overnight it'll be saying 100-point positive, and you'll be having excitement, you'll be holding longs, and you'll be having all the excitement, and you'll be anticipating next day Nifty is going to open 100 points higher. But in the live markets, when the market is about to open by 8:40, all the values would have been corrected, and then it will be neutralized, and you'll be opening casually without any gap up. So you'll be getting frustrated if you're going to watch those SGX Nifty, and or you'll be in unwanted tension. Like you're holding longs, and the next day SGX will be showing 100 points negative by midnight, and you come in the morning, it will open as if nothing happened. So it puts you in a terrible situation most of the time by watching. But it's good to watch SGX Nifty to guess where the market is likely to open, especially if you are watching around 8:45 or 8 o'clock. You get a fair idea about it. That is okay. But what is not okay is that watching SGX Nifty all the day, refreshing the screen every 5 minutes once, and monitoring what SGX Nifty is doing, which is not a good monitoring at all. And also looking into Dow Jones, what the Dow Jones is going to do, is the Dow Jones is going to crash, how the market is going to react. So somewhere market will react. If there are global sentiment, you will come to know by 8:30. You will come to know what is the global sentiment. Watching the US markets is like watching porn, to be frank. Okay, so you're not going to get anything out of it. Only what you will be getting is you will be getting only excitements about the price. Oh, Dow Jones crashed. That's going to bring a big gap down. And tomorrow you will see the reality. You will anticipate 100 points gap down. Instead, it opens a 10 points gap down, and then it started moving higher. Or it opens 30 points gap down, and then it completely reverses all its game. Right. So you have to try to avoid watching all those things. It's good to know how it happens, but watching all this information again and again is like, it's quite equivalent to watching porn. Right. So with this, I'm going to stop the session here. We'll continue again tomorrow at 10 o'clock. Thank you.